Are we on the verge of a housing shakeup that could redefine the rental landscape in Ontario? With the average one-bedroom rent in Toronto hovering around $2,500 a month, many renters are already feeling the pinch. Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. Ontario's new housing legislation proposed by Premier Doug Ford's government has sparked significant concern among housing advocates. According to a recent article from CBC News, this legislation could potentially end rent control and indefinite leases across the province. The government argues that the bill will streamline approvals and allow developers to build homes more quickly, a move they believe will ultimately benefit the housing market. However, buried within the bill is a proposal that could allow landlords to have greater control over who occupies their units and for how long. This has raised alarms among advocates who fear that such changes could lead to the eviction of long-term renters, particularly vulnerable groups like seniors and students. Stacey Semple, a volunteer organizer with Acorn, a nonprofit advocating for affordable housing, expressed her concerns, stating that this legislation could remove essential rights from tenants. She fears it could result in increased evictions, as landlords might seek higher rents to maximize their economic returns. Currently, tenants in Ontario benefit from security of tenure, allowing them to stay in their rental units as long as they adhere to the lease agreement and the Residential Tenancies Act. But with the proposed changes, this security could be at risk, especially in cities with high renter populations like Toronto, where almost half of the residents rent their homes. The government, on the other hand, claims it is consulting on these lease expiry rules while ensuring tenant protection remains a priority. They emphasize that tenants will still have strong protections, including limits on rent increases, which remain below the inflation rate at 2.5% for 2025. Long-term renter Leigh Beadon shared his shock on social media, highlighting how this proposal attacks tenant rights across Ontario. Beadon, who has lived in his apartment for nearly 20 years, fears being forced out due to potential rent hikes. His concerns echo those of many renters who worry about being priced out of their homes and communities. Critics of the bill, including housing advocates and opposition parties, argue that the proposal could lead to unfair evictions and exacerbate the affordability crisis. They stress the importance of building more homes rather than removing existing tenant rights. Despite these concerns, the Ontario government insists that they are committed to protecting tenants while supporting landlords, particularly those who rely on rental income. As discussions continue, it is crucial for tenants to remain informed and engaged in the conversation to ensure their voices are heard. This proposed legislation could have significant implications for the multifamily real estate market in Ontario, and it is vital to stay informed about how it could impact both landlords and tenants. As always, we'll keep a close eye on this developing story and provide updates as more information becomes available. As Canada's housing market continues to navigate high interest rates and rising ownership costs, the rental sector has become one of the most important areas for investment. Yet with that opportunity comes risk. Fluctuating demand, tenant defaults, and legal complexities often make rental ownership unpredictable. Nathan Levinson, founder, president, and chief executive officer of Royal York Property Management, believes that property management should not only protect investors, but also strengthen the housing market as a whole. Through systems designed for consistency and transparency, his company has built a model that turns rental ownership into a reliable, long-term financial strategy. Royal York Property Management manages more than 25,000 properties valued at $10.1 billion across Ontario. Under Levinson's leadership, it has become Canada's largest property management company and one of the few that combines financial protection, technology, and in-house operations under one structure. Levinson's vision has always centered on stability. For many landlords, the biggest challenge in real estate is inconsistency. Months of full income followed by vacancies, costly repairs, or delayed payments. To solve that, Royal York Property Management introduced the Rental Guarantee Program, ensuring that landlords receive rent even when tenants default. The company handles the legal process, eviction, and tenant replacement, allowing owners to maintain steady cash flow. Predictability changes everything, Levinson says. When investors know they will be paid, they stop worrying about short-term losses and start thinking about long-term value. This approach has made rental real estate more appealing to both individual landlords and institutional investors who prioritize steady returns. Royal York Property Management's model combines financial safeguards with operational precision. Its platform manages leasing, maintenance, and legal compliance in one system. Payments are automated, maintenance requests are tracked in real time, and every action is documented. This structure minimizes error, reduces risk, and provides landlords with full transparency over their assets. We built a business that treats property management like financial management, Levinson explains. Our clients expect the same level of reporting and reliability they would from any investment firm. The company's in-house teams, including maintenance technicians and legal specialists, ensure that every part of the rental process is handled professionally and quickly. That combination of human service and digital control has become Royal York Property Management's signature advantage. Canada's real estate market remains volatile. Inflation, high borrowing costs, and limited supply have reshaped how people view housing. Levinson sees this as an opportunity for the rental sector to play a stabilizing role. When ownership slows, renting grows, he says. The rental market absorbs demand that would otherwise create pressure on housing prices. Royal York Property Management's data-driven systems help identify trends in tenant movement and regional demand, providing insights that support better investment decisions. By maintaining steady rent collection across thousands of units, the company also contributes to broader market stability during economic shifts. For Levinson, the company's growth is not just about technology, but leadership discipline. He emphasizes measurable results, standardized processes, and clear accountability. Every regional office operates under the same service protocols, ensuring consistent quality regardless of location. Growth only works if it is structured, he explains. Systems keep you consistent, but leadership keeps you aligned. That philosophy has turned Royal York Property Management from a small startup into an organization that influences national property standards and investor confidence. Royal York. Property management's success reflects a shift in how investors view rental housing. What was once seen as a passive income stream is now an active, managed asset class supported by infrastructure, technology, and professional oversight. As housing affordability continues to challenge major cities, well-managed rental operations like Royal York's provide both stability for investors and security for tenants. For Levinson, that balance is the future of real estate. Investors need protection, and tenants need trust, he says. When both sides feel secure, the entire market becomes stronger. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.